Hello, this is John Cato, 30-Minute Trading and FX Profit Lab. Just hope this is a useful video for you. The question is, how do you decide which assets to trade? And of course you can trade anything you like really, but let's look at it from a financial point of view. What's going to give you the best reward for what you're risking? So let's just start with that thought. Let's just look at what we've got. Down the left hand side here I've got spread. Now obviously spread is the cost of trading. So whatever the spread is what you're going to have to make up when you've put the trade on. So at $1 per pip or £1 per pip, when you're trading gold on this particular broker, it's 0.5 is the spread. So if you're doing $1 for each unit per pip, that would be 1 mini, then you're actually risking half a dollar just to get in on the trade. It's paying 50 cents for the trade, or 50p if you're in UK, or 50 cents in euros, of course. Same's true for all of these. So this is what it is. Like the Japanese index there would be 8 pips spread, so that's $8 for the entry. Now that by itself is not enough information. You need to know how far the price is likely to move in any given time period to work out what the inherent reward to risk ratio is. I describe this in full in my book, How to Trade Forex. Anyway, the inherent reward to risk ratio is basically decided by dividing the spread into the average true range of the candle that you're trading. Let me explain a bit further. Let's take something that we know the spread's tight. There's a 1 pip spread on the DAX. Then it was trading at 980. Of course, it's a lot higher than that now, as we know. And then I won't bore you with this at the minute because that's not part of this particular conversation. I will say that the average true range on the week was 360 pips. Now with a 1 pip spread on a 360 pip move on the week, we end up with an inherent reward to risk ratio of 359. That is, at that time, that was the best you could do. If you look down through this table here, you can see what other things. You see silver has got 34. So if you're deciding to trade something, you'd much rather trade something with a 359 inherent reward to risk ratio than a 34. And you can see other things here, color coded. Basically anything green says that we're good. That's a good asset to trade. And the same principle applies all the way across. So let's just take the DAX because that's pretty cool. The daily's got a 143 average true range at that time, which gives us an inherent reward to risk ratio of 142. Very strong, very good. And all the way through here you can see what it is and the inherent reward to risk ratio. Now I've got this in this calculator here, the spreadsheet, which you're welcome to have a copy of if you'd like it. That is set up in here. Anything I put in there as my levels for green. So I'm going to be really aggressive on my levels for green because that way I'm isolating down only the assets that are really likely to be high performance in terms of inherent reward to risk ratios. So let's go through the rest of the table. I hope I made that clear. Each one of these that are in green are therefore assets that I'd be interested in. Here we've got the Australian index, the FTSE, the DAX, the French index, that's the CAC, and then down here the RUS is another good one. The Dow Jones is just creeps in, and the S&P 500 definitely. And then down here we've got the Aussie yen is a good one to trade. The Aussie dollar is another good one to trade. Coming on down here we have the euro yen and the euro dollar, and coming down a bit further we've got the pound yen, anything else, the dollar yen. There you have it. All right, So those are the assets at this particular time that I would have been willing to trade, because they all match onto something which is a good reward to risk ratio, inherent reward to risk ratio. Now obviously I can fiddle with the numbers up here. If I come up here and change this and say, well, actually I'm willing to accept something, a bit lower than that. Let's say I'm willing to accept 15 instead of 17. If I change that, you can see now that it's introduced this. That just went to green. That's the pound CAD at the time, I think. No, the pound Aussie at that time, okay? So this allows you to isolate the assets that are currently worth your while getting involved with and giving you a good inherent reward to risk ratio. The other information on here, which is not part of the question of which ones should I trade, which are good assets to trade, but these indicators here, that's bull bear butterfly indicator values. This tells you whether or not it is in trend or not. So here we got the bull bear butterfly is 1475, 1475 on the daily, 1475 on the 4 hour, 1450 on the 1 hour, 975 on the 30-minute. That is a very, very strong bullish move. So basically any trade on that asset at that time would have been absolutely ideal, because we've got the inherent reward to risk ratio as being green throughout, and we've also got the bull bear butterfly as being green throughout. Long trades on that, you're unlikely to lose any money on that. Well worth you are getting involved. Great trading asset that particular time. These other ones you can see, if I go through the rest of them, let's take a euro yen, because that's a good one. If you look at the weekly, it's saying we're definitely butterfly, 1.75. That's neither here nor there. We're on the daily, we've just moved bullish. On the 4 hour we're neutral pretty much. On the 1 hour we're down, so that's bear. On the 30-minute we're down, that's bear. Basically we've got a lot of mess going on here. We haven't got any agreement of what's going to happen next. The market is totally undecided. On the daily we're looking like we're going long, but on the weekly we're looking like we're not doing anything. And on the 4 hour and the hourly and the 30-minute, there we're doing nothing, but there we're going down. So essentially that trade I would just not be interested in trading at that time. It's too undecided, it's too much like a risk, a gamble. I would leave it alone. So basically that's how I decide how to trade any particular asset at any given time. Now when I'm interested in trading, of course, then I'd take the particular assets, I'd put up the chart, and for example euro yen now, let's just take the euro yen now and see what we get. Euro yen 30-minute, okay, so here we are on the euro yen 30-minute, and we can see at the moment the bull bear butterfly line is down here. It's about -2 or so, minus 275 it's reading. So for this particular moment it's minus 275 and the price is 120.06. So let's just bring up the calculator again. So I've just brought the calculator over the top of this. Let's go back to this, okay, 120.02. So we put in 120.02 in there, 120.02. And now we're going to start with this one, which is the 30-minute. So the 30-minute candle is here, and we can see that the values we've got for the bull bear butterfly is down here, and there we go. That is now 3. It's reading -3. So all I do now is put in -3 into there, -3. Now I'm going to come through and do the same for everyone. So let's bring up the hourly chart. Hourly chart is here, coming down here, bull bear butterfly -8.75. -8.75. Next chart, the 4 hourly, we're down here, bull bear butterfly is down there, -13.5. -13.5. bring up the daily chart. Here's the daily. Currently we're reading plus 7.25. Let's look at it from the weekly point of view. And the weekly point of view, we're reading minus 10.5. Minus 10.5. Okay, so now you can see that the readings we've got across here are weekly. We are bear. We're quite clearly a bearish move going on. But from a daily point of view, we're bull. So it's saying that we've got a daily pullback within a bear trend. And we've now got a bear trend on the 4 hour, the 1 hour, and the 30-minute. So if you believe it's worth taking a risk with trading that, and you believe the weekly has control, which is this one here, then you'd believe that it's worth your while taking a trade short now. But that is against the current trend on the daily, so that would be going against the daily move. Let's have a look at the daily again and see what we think. So the daily is pulling back on the bull bear butterfly, but if you now look at the other indicators, litmus is short, mtrader 3 is short, mtrader is poking up, maybe going long again, strader is short. So in this particular thing, we've got a conflict going on here as well. That conflict suggests a move to the upside. So we've pulled back and moved to the upside. If we could get agreement across all of those, then we'd have another move down to the downside. My suggestion would be in this particular trade situation that we might be looking for, especially if we got a move back up to this Darvas support line. So it's broken the support. If it comes up and hits the support again, so it creates that support becoming resistance, and we got the indicator here, the mtrader indicator, again deciding to move back down again with another trade alert short, we'd be interested in a short trade off of that, because that would be in agreement with the weekly. So yeah, anyway, there you go. I hope that helps you. I hope you give some food for thought anyway. And if you're interested in this calculator, there's a lot more to it than that, but it gives you a good overview about what you should be trading and when you should be trading. You can see there's various other things like trade risk, details on the trade risk short. So in here, for example, one would put in here the Euro JPY, for example, in there. And then we'd fill in the rest of the details in here, which would work out where your stop should be, and it gives you suggestions where the stops are, tells you how much you should trade. In this particular case, these are the values here. So these are minis. In this case, we're dealing with 120.02, so in here we'd have 120.02, sorry, there we are. And if our stop in this particular case was, and we're not going to go short at the moment because we've already said that it's pointing upwards, but we want to wait and see what transpires. But if we're going short and we had our stop up here somewhere, then we'd put in our stop price in there, 1200, I don't know, 5 or something. That's too close. 40, how about that? Okay, so now we've defined where our stop would be, 40, roughly where that crosshairs is. And if, let's say our targets were down here somewhere. Our first target is 118.18. So 11818. That would be our first one. Let's say our second target was down here, 115. I'm just generalizing here. The software would tell you what it is. When you get the alert, it will tell you where your suggested stops are. Your average true range on this is this value down here, you can see. And this value is currently reading 84.84. Okay, so that's 84 pips or something like that. So ATR, let's say that's 84 on there. Our spread, let's assume the spread's the same as it was last time I did this. This lot up here allows you to do the conversion for the exchange rates to work out the pip value. I'm not going to do that right now because that's another subject as well. Here's the inherent reward to risk ratio, 56. Very good. That's perfect. We like that. This says that if your entry price is 12002, then your stop from ATR point of view ought to be 12066, and a take profit targets are 11934 and 11855. So that would be target 1, target 2. It's saying on here, down here, you can see that on that basis your risk per pip should be 1.5 minis, in which case you would then fill in the box here and say 1.5, and it would follow on the calculations. If you used your own sums for doing it, then the risk per pip would be 2.5, in which case if you took those values you put in 2.5 and away you go. Let's say we're going to take the ones that it calculates for you, 1.5, and that's the lots, that's the micros. Risk value is 53, so that's the actual risk value that we've got on the trade at 1.5. 53 there. Sorry, wrong. That's 90. So this is 53 after it's taken other sums into account. And then it works out down here more details of what your trade is worth. So it's saying your position controlled at that rate is 15,000. And down here, that if you hit T1, you'd get 93 back in return for your risk. So that's roughly a 1-to-1 at T1. And then down here you get 200 back. That's roughly a 2-to-1, $205 if it were to hit those targets. And it does other things too. And then you can also work out on details of your trade summary. You can put all your trade summary in here. It'll allow you to put in details from MetaTrader of all the different trades, exactly what it is, how many pips you've won and lost, and so forth. And you can copy and paste the screenshots, because I'm a strong believer in using records to keep a record of every trade. And if you keep a record of every trade and after the event analyze it, so you could take a snapshot when you enter the trade, you take a snapshot later on during the trade or at the end of the trade, you can then analyze whether your trading decision was made successfully or not, whether you made a good trading decision or not, because sometimes you'll make winning trades that are bad trading decisions. So anyway, I hope that helps you, and I won't go on about that anymore because I think I've covered it quite well. If you want to know more, let me know, and I'll make sure you get a copy of this particular trade calculator, and also let you know how you can use it. So there you go, wishing you happy trading. Next thing is really any questions.